Hello traders, welcome to the Trader Education Series, video number 4. In this video, I will discuss all about gaps. So basically, we will discuss what gaps are, types of gaps, what are the different types of gaps you can see on price graph, why gaps appear on the price graph, and very important, importance of gaps in trading. Now guys, gaps are also known as windows. In case you have read the book of Japanese candlestick charting technique by Steve Nisson, then you might be know this. Gaps are also known as window. But in case you have not read this book, I will strongly suggest you must read this book. This is the very famous book in the world of technical analyst, Japanese candlestick charting techniques by Steve Nisson. Now let's see what exactly gaps are or what exactly windows are. See, you can divide this gaps into two different types. Okay, rising gap and falling gap. Now, when you find a stock price suddenly open gap up, when opening is above PDH, that is previous day high, that will be called as rising gap or gap up opening. And when you see stock price open gap down, that is opening is below PDL, that is previous day low, then it will be termed as falling gap. Let me show you one example. This is the price graph of State Bank of India. Now, after budget session, see what happened. This stock has given a rally of almost 50%, 50 in less than 20 trading session. And in between, you can see the gap area on the graph. Now, this is the daily time frame. See, on this day, what happened? This is the bullish candle. Next day, you can see price directly opened well above PDH. Opening is above this candle high. So we can say opening is above PDH, that is previous day high, and you see the gap area. So this is called as rising gap, as opening is above PDH. Now completely opposite, falling gap. This is the price graph of Biocon. In the month of January 2021, we got falling gap. Look at this bearish candle. And next day you can see suddenly price opened gap down. Opening was below previous day low. Opening is below this candle low. So this is falling gap. Now guys, very important, you need to understand here as a trader, you must know this. Gaps work like support and resistance. Now, if there is a rising gap, you will find rising gap can work like support. And when you see falling gap can work like resistance. This is the price graph of Nifty. This is the 1st February candle, 1st February 2021, budget day candle. A strong bullish candle. Next day, you can see Nifty opened gap up. Opening was again above PDH. So this is rising gap. And you can clearly see how beautifully Nifty is taking support at this gap area. So remember this point, rising gap work like support. This is falling gap, Biocon. We have seen this. Opening was gap down. Opening was below PDL, previous day low. So this is falling gap. This is the gap area. And you can clearly see how beautifully again price is taking resistance at falling gap. Isn't this amazing, guys? How beautifully price is respecting this gap area. Let me show you some more examples to you. Let's say maybe LIC Housing Finance, we can check. Okay, this is the price graph of LIC Housing Finance. You can see this is the clear downtrend. Within this downtrend, we got gap, falling gap. Now let me show you first how you can draw this support and resistance line. So I can see gap between these two candles. So what I will do now, I will note down the low of this candle. See, when I place cursor on any candle, what you can do, you can read the data from top. Okay, this is the name of counter, this is the date, and this is OHLC section, that is open, high, low, close. So when I place a cursor on this candle, you can note down date and low. So this candle is formed on 21st August 2019. Look at the low. L stands for low, 457.30. So you can draw one horizontal line at low. You can draw another horizontal line at the high of this candle. High of this candle is 406. So I can say this is the gap area. Okay, let me check once again. Sorry, high was 439. So from 439 till 457. Okay, this is the gap area. This is the potential supply zone, resistance zone. Very high chances if price will appear in this gap area, it may reverse. So you can see how beautifully price took U-turn from this gap area. Just a minute. Okay, from this candle, you can see price took a beautiful U-turn from this gap area or resistance zone. Now let's see how, why gaps are why gaps appear on the price graph. See, gaps appear on the price graph because of overnight development. If there is some negative development overnight, you will find next day price will open gap down. Okay, opening will be below PDL, that is previous day low. So this is the one reason why suddenly price will open gap down if there is any negative overnight development. Now let me show you one more example. Indico. So Indico in the month of November 2020, you can see this was the uptrend and suddenly it opened gap up. Now why price suddenly opened gap up? Maybe there was positive development overnight. So you will find opening will be above PDH, previous day high. So we will connect low of this candle and we will draw one horizontal line at the high of this candle. So this is the gap area you can see from almost 1500 to 1550. And till date, you can see this gap was appeared in the month of November. Today, we are in the month of April 2021. Till date, this gap is price is holding this gap beautifully. Every time you can see price is bounced from this gap area. So this is the very important point. You need to pay important attention to this point. As a trader, you should know price always take U-turn. Very high chances price may take a U-turn from this gap area. So this was rising gap. Price is taking support at rising gap. If there was a falling gap, price will try to take resistance at falling gap. Now guys, how you will trade options as per the gap? So as you know now, gaps works like support and resistance. So you can sell options when you find gaps on the price graph. So we are conducting this webinar on option writing, how you can write option using gaps. Okay, without looking at open interest, put call ratio, option Greeks, wicks. We have prepared this webinar in a simple way. You can write option, you can sell option using gaps, because just now we have seen how price react when it comes near the gap area. So in case if you are interested, you can join this option writing webinar where you will learn two powerful option writing setups. So number one, option writing using gaps. Number two, nifty intraday short straddle strategy for consistent profit every month. So we have backtested this system, guys. The accuracy of this system is 76%. And trust me, you can make consistent profit every month. So we will also share backtesting results with you. You will also get 2 months live market support after this webinar. So what we will do, we will meet live in market hours every Wednesday and every Thursday, 2 days in a week. And we will try to find out opportunity in live market where we can sell option using gaps. And I will make you trade live this nifty intraday short strategy setup every Wednesday and Thursday. We trade only 2 days in a week. See, options are depreciating assets. So as an option writer, we are interested in earning theta decay. So maximum theta decay happen from Wednesday onwards. That's why we designed this nifty intraday short straddle every Wednesday and Thursday. Just 2 days in a week. In a month, you will approximately get 8 trades, and accuracy rate is 76% as per last 2 years back testing result. So you will also get 2 months live market support after webinar. So when we are conducting this webinar, we are conducting this webinar on 24th and 25th April. In case you are watching this video after 24th and 25th April, you can still contact us and check if we are offering this option writing webinar. You will also get recordings and PPT once you enroll. So for more information, you can call or WhatsApp on this number.